Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Mathew and with me is Smriti Chaudhary, and we will take you through the next half an hour or so of trade. Now, if you've got questions on stock markets, on stocks in particular, then you can send them to us on any one of our social media platforms, but also very conveniently you can send it on that number that you see on your screen and we'll take it up over the course of the show. But before we get to your questions, let's take a very quick check of where the markets are right now. And you have the benchmark Nifty 50, which is trading at just shy of the 23,000 mark, and it's not doing too much. It's just about 0.2% higher. A little more action in the broader markets. You have the mid-cap index that's up about 0.5% or thereabouts, and you have the small-cap index that's also up around 0.5% or so. Now, understand that a lot of what you're seeing in the markets today and over the last few days is on the back of significant volatility. And let's pull up the VIX, in fact, and it is up today as well. It is at over 20 very comfortably, and that indicates that you're seeing higher volatility in the equity markets, and that's par for the course, considering that everybody is building up to D-Day, which is Tuesday next week, when you will see the result of the ongoing general election, which has entered its last phase. Let's talk about a few of the benchmark indices, or in terms of the sectors that are moving in trade today. IT is up and about and is the top gainer in trade today, followed by realty as well as the bank Nifty. By the way, the Nifty Bank, you should watch out for 50,000, which is not too far away, just about 700 points or so away from hitting that mark, and that would be quite the landmark. There you go. It is in fact less than 700 points away at this juncture and trading very close to the high point of the day. Energy and media right now are the underperformers. Among the key drivers of the move on the Nifty 50, you have HDFC Bank, which is contributing the most. And in fact, it was one of the key contributors in trade last week as well. It is, to a certain extent, one would say, playing catch up. But Smriti, one of the groups of stocks that has been doing particularly well over the last week is the Auto Ank group. And I was trying to understand why the street has suddenly sat up and taken notice of this group of stocks. It is earnings, and we've got Puneet joining us to tell us what the key takeaways there were. So, Puneet, what can you tell us about your key takeaways from the earnings that you saw?
Well, there were multiple companies that came out with earnings specifically in the auto ancillary and component space. We picked out the ones which have delivered good results, and have also given some forward commentary as well. So we start with Bosch. The company has added roughly 1,200 crores of market cap just today. It reported results on Friday, and it said that, their while revenue as well as EBITDA was in the mid-single digits, the margins rose roughly by 30 basis points. The net profit resultantly rose roughly 41% on strong operating leverage for the company, and they have also said that going forward they are expecting good demand for the next fiscal year. The second one that we're tracking is Minda Corporation. The results came sometime in mid last week, and while the results were really good on a strong operational performance, they had a slight they were lower compared to the last year because there was a tax write back. If you remove that, there has been a growth of roughly 17% in their profits, while revenues also rose up by roughly 10%, and EBITDA is up 18.5%. When we look at what brokerages are saying, Nuvama has a buy call with a price target of roughly 530 rupees, which is a 24% upside from the levels. They have said that the company's lifetime orders in the EV space have crossed 9,000 crores over the past 2 years, and that's where they are getting their positivity. Another Minda Corp company, which is Uno Minda, that's also up 8% in just the past 5 days, buzzing on strong results. As mentioned, revenue rose roughly 31%, while EBITDA was up roughly 48% compared to the same time last year. The margins have come in upwards of 140 basis points to come in at roughly 12.5%, while net profit is up 55% to come in at roughly 300 crores. They have also expanded their current facility of the plant located in Ahmednagar, and brokerages such as Nuvama is positive and seeing a 17% upside from the current levels as well. And finally, Gabriel Auto, the results come, this is a slightly smaller company, came out with results on Friday. The revenues grew roughly 16%, while EBITDA also came up roughly 160 basis points. The reason we're highlighting this company, it has an 80% market share in the two-wheeler EV space, where they give their products out to the likes of TVS as well as Ola and Ather in the private space. So overall, strong show by the auto component makers. Definitely valuation concern on the OEM space. Giving options in the component space is one of the key triggers, as well as earnings, as you rightly mentioned. But overall, good show. Back to you.
Thank you, Puneet, for that. On that note, let me introduce you to the guests for today. We have Kunal Rambia, founder of The Street, and Sameer Dalal, Natwalal and Sons Stockbrokers. Welcome to both of you, and thanks for joining in. Sameer, I'll come to you first. You heard Puneet talk about the results of all the auto and companies. You've seen how these companies have run up. There's a bit of positivity that has now taken over post this FY24 results. Do you see this sort of trajectory continuing in the next year as well?
So, will the growth trajectory continue? Yes, it will. Very rightfully, the numbers have come better. Two reasons. One, when there was the chip supply demand, obviously the number of cars sold were not growing at that same pace, because of which the auto anchors, who supply to these OEMs were not getting the same kind of traction. So the fact that now that supply side constraint has eased, what you're seeing is the demand uptick and the operating leverage playing out, because they already have the capacity to manufacture, they have the staff strength, they had all of those things in place. And given the fact that you're seeing volume uptick, you're seeing the operating leverage, which is showing very clearly in the fact that operating margins and profitability are growing at a much faster clip than the top line. Now, why I said going forward also we expect numbers to be good is we still believe that India has a huge growth trajectory. But now the base is a little bit higher. So we may not see the same kind of growth numbers coming in this FY25 as we did in FY24. There will be a skew, maybe, somebody who's more in the electric vehicle space might see growth coming in a little faster, because that segment has a low base which can see an uptick, and someone catering to that segment might see, a volume uptick. But overall, we do believe the positivity remains. But what you also said is the stocks have also run up quite significantly. So can the stocks maintain its run rate of continuously going up? That's a little difficult to call at this point. But yes, if you have a 2 to 3 year investment horizon, one can make an investment. But if you're a 1 year horizon, I think wait for opportunities, correction opportunities to invest. And what you all were discussing earlier, Tuesday is going to be the result election. I think you might as well defer your purchases to that point, see what comes out of it. Not necessary that you get a major correction or something is going to come different, but you might as well wait for that event to finish before you make a headlong plunge into the investment for the next 2 to 3 years.
All right, got it. Let's start off with the queries now. And the first one is from Rajesh, who's talking about Kotak Mahindra Bank. Kunal, this is a short-term query. They say they bought shares at average price of 1,600 rupees. Now, the question is, they have a target of 1,800 that they want on the counter. Do you see that happening in a short to medium term? And the question is, are you expecting some sort of correction in this? Now, in the last week, we saw banks participating in the overall rally that the market saw. But do you see that kind of happening in something like a Kotak Mahindra Bank?
Morning. Thank you so much for having me on the show. So looking at the overall long-term chart of Kotak Mahindra from November 2020, almost 5 to 6 times actually this counter came down to 1,600 and it took a decisive bounce. This time it was a 3 years opportunity kind of. The counter went till 1,550. And again, it bounced back to the same level and it's going on positive as of now. And the resistance, as our viewer is actually expecting as a target, is rightly placed at 1,800. So, keeping that entire formation in mind, I think one can certainly hold on to the position. The trailing stop loss on this can be 1,640 and the target can be 1,800. And I'll request our viewer to, because he's a short-term trader. So as the price of target of 1,800 is reached, trail the stop loss, hold on, because if the counter manages to go above 1,800, we might just see the levels of 1,950 to 2,000 also.
Okay, that's quite a significant upside from this point. And of course, Kotak is a stock that has taken a bit of a beating after the regulatory headwinds that it went into. A couple of stocks that have been in focus in the recent past, and Reliance Industries as well as Adani Enterprises. This is a question from Mohan Warangal. He's holding Reliance Industries, but Kunal, the question that he's asking is, should he sell? I'm not sure of his buy price, But assuming that he's bought a short while back and he's making an upside, should he sell Reliance Industries and buy Adani Enterprises?
Morning, Alex. Again, the Reliance chart is definitely positive. But if you look at the overall formation of last 3 months from February so far, this counter is more or less been in the sideways consolidation. The resistance is placed at around 1985 and the support is at around 2835 kind of levels. What we saw on the chart just 3 days back was 1985 itself, and now the counter is near to that level. So if the approach is short term, this is the level to take an exit, wait for some correction, and then reaccumulate this counter because the trend is positive. But unless and until this counter manages to close about 3000, I think this sideways consolidation might just continue. So from short term point of view, it's certainly an exit level.
All right. The next counter is Divi's Laboratories. This also came out with its numbers and a very strong show there. The question is from Rajesh Maheshwari. They say they bought the counter at an average price of 4,435 rupees, slightly elevated from where it's currently trading at. They're looking for a short to medium term view on this one. And Kunal, coming back to you on this. We're seeing a 4% uptick in the stock today as well. But from a short to medium term, do you have a target on this counter?
See, this is a counter which is in limelight due to the result effect, certainly. But I'll just take you back to May 2022 levels, specifically in the 23rd May 2022 of that year, that particular week. Actually, the counter came down by 18%. Since then, the counter was struggling to surpass the levels of 4,000. It almost made 5 attempts, but all were failures. What we saw was last week, the first breakout after almost 2 years of consolidation. So this counter is now poised for a new rally on the upside. That's very sure. Now, if our viewers is actually looking out for the short-term trading, I'm very sure he has bought it at the elevated levels. We need to be a little cautious. But otherwise, this counter can certainly be accumulated near 4,100 to 4,150 mark. The positional target on this is as high as 4,750. So I'm very bullish on this, but I think risk reward has to be kept in mind. The trailing stop loss of this entire view is right now at 4,000 levels itself. So keep that level in mind. If the counter comes down, accumulate little more. The stop loss will be 4,075. Target will be 4,750.
Okay. The next question is on Asahi Glass India. And I'm just pulling up the longer term charts. It's done reasonably well over the last 12 months or so, up about 30%. I'm not sure when Sachin Mehra has bought this stock, but he's asking whether to hold or sell. Based on the prospects that you see for this company, what would you suggest, Samir, on the fundamentals?
Sorry, I don't have coverage on Asahi.
Okay, so then let me ask you the next question, which is from Vishnu, and he's asking for a fundamental long-term buy. And I take your point that you would wait for the next week or so to place those orders, but which stock, in your opinion, is the best possible fundamental story at this juncture?
So if a person has a 3-year view, to me, if you want to be relatively safe and invest in a large cap, HDFC Bank to me is one of the best buys at this point of time. If you see, the valuation has corrected quite significantly. HDFC is a great long-term story for the simple reason that after the merger, what's happened is the high cost interest borrowings of HDFC Limited have come into the bank, right? And that needs to be replaced. So as the deposits keep increasing, what you will see is the NIMs increasing for HDFC Bank, which will automatically drive profitability. That apart, they're continuously growing at a good 15 to 18%, and we believe they will be able to sustain that. So I'm not saying it'll go back to its 4x valuation, but from the current valuation, I think it has the capability to re-rate by a good 20-25% on the valuation front. And then you talk about a 20% growth. So, I could comfortably look at maybe like a 25 to 30% CAGR over the next 2 to 3 years. Again, low risk because very clean management, very good book, great growth opportunity. So that is one of the stocks that I would be definitely recommending from a large cap perspective.
And in fact, 3 years is pretty much the time frame when a lot of those kinks are going to be ironed out, according to at least a lot of the analysts that are tracking the bank. I will try and get a view on Asahi. I tried with Samir, but Kunal, do you have a view on the charts to indicate whether or not you should hold on to this at this point?
Certainly, Alex. So again, as you rightly mentioned, right, the counter is in certainly positive trend. And if you look at the last 2 years consolidation, it's consolidating with the positive bias. on the entire last 4 years of chart, there is not even a single lower top, lower bottom. So the trend is very much intact. So yes, one can certainly hold on to it. If the view is little positional, then keep the stop loss of around 540 in mind. If the counter manages to remain above that level, I think one can certainly hold on above 675. I repeat, 675. That's a breakout level. I think the level still 800 can also be seen because of a broader consolidation breakout. So yes, I'm very bullish on it. Keep the trailing stop loss right now at around 500 levels, 525 levels.
All right, we'll slip into a short break here, but we'll be back and we'll take more questions on the other side. Stay tuned. Welcome back. You're watching Ask Profit on NDTV Profit. Let's dive back into the queries. This one's from Srivardhan Reddy from Bengaluru. They're talking about Zomato, that they bought the counter at a price of 184 rupees, slightly above where it's currently trading at. And this from a longer term perspective. Samir, on a Zomato, we saw the Q4 performance, a decent set of numbers, but the counter has been in a bit of a correction mode since then. But brokerages continue to remain very positive on the counter. Would you even say, this is from a perspective of the person who is asking the question has bought into the shares, but I would also like to ask go ahead a little further and ask if this is an opportunity to buy a stock like Zomato.
It's been in correction, but you also got to look at the fact that it ran all the way from 50 to 200, right? So you've seen a significant run up. And there will be people who probably invested in 50 who would probably say, let's take some money off the table. And that is why the correction is happening. Now, if you look at the long-term perspective, so the question you are specifically asking, is it a good buying opportunity? I find it a little difficult to say, yes, it's a buying opportunity. because yet I still think that the earnings still have a long way to catch up. But do I believe they will catch up? Yes, I do. Why do I say that? Because the online ordering space is only going to continue to see an uptick as discretionary spends continue to increase, which is the very likely case in India. So I'm very positive on that. Secondly, their subsidiary Blinkit is also doing extremely well. They've managed to turn it around very quickly. And that space is also going to see in fact, that space has even more growth potential, if you ask me, than what Zomato by its standalone has. Now, also, if you look at the numbers, a huge chunk of the cost for them is coming as for the ESOP conversion. Now, that is actually not a cash outflow for the company. And I mean, I don't like to consider it as an expense, but yes, you get diluted down in the equity side, but it's not a cash loss. So at the end of the day, when you study the cash profitability for the company, I think they're doing quite well. And I continue to believe they will do well. Any corrections closer to 150 levels, I would definitely be a buyer from a longer term perspective. Now, given the person who's bought at 180 I would say hold on. If you have a longer term view, if you get dips lower, add on to your position.
I'm coming to you, Kunal, on this next one. The counter's Time Technoplast. It's currently trading at 268.5. And it's a question from Hari, who's writing in from Chennai. He's bought at levels of 285, and he's wondering what both the short-term and long-term prospects are based on what you're seeing on the charts.
So again, Alex, we keep on discussing regularly on our channel that if the counter is a trending counter, then one should not really buy on the breakout, rather wait for the consolidation and the support to come in. The same is with the Time Techno. I think the breakout he must have initiated in just last week itself when the counter made a high at around 300 levels. That sounded like a breakout, but it wasn't. The counter is still making higher top, higher bottom. At 268, I think it's well poised for a long position with favorable risk-reward ratio. So as of now, it's certainly a hold. The trailing stop loss on this as of now seems to be at around 250 levels. Now, if you just look at the last 3 months consolidation, the support was at 250. That's the reason we are maintaining the level of 250 as a stop loss. Hold on with the stop loss of 250. By any chance, if the counter comes to 265, I would advise him to take some average out position also. And then on the rally, he can just hold on with a target of around 310 to 15 in mind.
All right. The next counter we're talking about, two counters, Angel One and Motilal Oswal. This one from Shikhar from Hyderabad. They want to know if this is the right time to buy the counter. Sameer, this from a longer term perspective, phenomenal results by at least Motilal. Even Angel One doing pretty well. We've seen very consistent performance from their side as well. And the general perspective of how there's more market participation, more people coming into the markets, it seems like a positive trend that might just work for counters like these. Would you suggest buying at this juncture?
Not at this juncture. Am I positive on these sectors? Yes, I am. Of the two, I would pick a Motilal Oswal because they have more financial services operations, in the sense they are not only doing the stockbroking arm angle, but they also have wealth management and fund management. Apart from that, they also have the housing loan and the NBFC business, which is also growing quite at a decent clip. So I would that is one of the counters that I think has a great long-term growth opportunity. The simple problem with Motilal Oswal I find is the run-up has been very, very stark. Valuation re-ratings have already happened. Now we are purely playing the growth story. So corrections, definitely a buy. Angel is a slightly different company. It's more focused on the trading angle, where if revenue dips, if the market starts seeing a decline, I'm just giving you a perspective, say 1 year, 2 years down the line, volumes start declining, then the profitability for Angel will start declining, because a big chunk of the revenue comes from that kind of a business. And we've always seen whenever the markets get boring or down, the volume significantly reduce. So you'll see a lot of volatility in that, whereas Motilal Oswal, the bigger chunk comes from the wealth management business, which I think is only going to continue to see a growth. So I would prefer that one, but on a correction.
I'm coming back to you on this next one. It's a fundamental question. Sameer, this is from Satya, and he's asking, Devyani International is something that he's holding, and he's bought, if I'm not mistaken, at 170 levels. I'm just going to check. Yeah, so he's bought at 170 levels and it's currently trading at 150 or thereabouts. He's wondering whether to shift within the same space to something like a restaurant brand Asia. Now, we've heard that Pizza Hut is not doing particularly well for Devyani, and so he's wondering whether moving to something that handles Burger King is the way to go, or would you shift out of the space entirely into something that we were talking at the start of the show, which is the auto ank space, and specifically on Motherson Wiring, which is a relatively new listing but a spin-off of the Motherson Group.
So to answer the second question first, no, I wouldn't do that transaction, right? I am very, very positive on the QSR space in India. In fact, if you remember, I think we discussed on one of the last few sessions when I was on your show, that we are very positive. You see, what's happened is right now with interest rates having gone up and your EMIs for middle class going up, their discretionary spends have taken a bit of a hit. But once that recovers, once that comes back, I think these companies, QSR spaces, will do extremely well. Yes, the pizza space has seen competition increase, but then you're going to see the same increase even in your burger chains, because you're seeing an expansion of Popeye, which is catering to the burgers. You're seeing an expansion of Burger King. You're seeing an expansion in McDonald's. It's not like competitive, but the market share, if you ask me, that they occupy right now is still very, very small. Secondly, the operating leverage of this business is very good. So the minute your SSSG starts seeing a growth, that is your same store sales growth, that entire benefit of their SSSG transfers down into the PBT level. And that is a huge benefit these companies have. So if you look at it right now, these companies are trading at extremely expensive valuations of maybe 40, 50. But if you project 2 years down into the future, I think they will do well. So I would say stay put. If you have some more money and you want to invest in, you can look at a Westlife Developers, which is McDonald's. You can look at a RBA, which is Burger King. You can look at even something like a Barbecue Nation, which has these varied businesses, which is the barbecue restaurants, the Italian Toscano. You also have another Indian Salt, and they have a delivery kitchen set up. So, there are a bunch of companies in this space. I would stay invested, but stay invested in Devyani. I don't see too much downside from the current levels.
Fair point. Samir, as well as Kunal, thank you so much for joining in and for answering all the questions that you did. Always a pleasure having you on the program. And viewers, well, that brings us to the end of this particular edition of Ask Profit, but we'll be back, of course, tomorrow to take the questions that we missed today. It's been an absolute pleasure from Smriti and myself and the team that put this show together. Thank you so much for watching. Do stay tuned. Lots more coming up on NDTV Profit.
and welcome. This is Hot Money. I'm Agam Vakil. In this show, we take you through all the stocks which are buzzing in trade. But before that, a quick look at how things are panning in the markets. And at the moment, we're seeing more strength as far as the benchmarks are concerned. They've gathered a little bit of steam since morning. And at the moment, as you can see on your screen, Nifty is up by around 0.5%. What about the Bank Nifty? Is that also moving in tandem? Well, to a certain extent, yes, it is in fact outperforming the benchmark, up around 1%, and a lot of that is on account of a handful of private sector banks which continue to advance there as well. But to take a look at perhaps the key movers as far as the Nifty is concerned, that would possibly give you a good idea about how things are faring. Now, remember that earlier in the morning, it was fairly evenly poised between advances and declines for the Nifty 50, but now we have about 35 gainers against 15 losers, and HDFC Bank along with ICICI Bank were providing that impetus on the up move as far as the Nifty is concerned. Remember that the Bank Nifty has not yet hit a life high. The Bank Nifty is still about 2% away from that life high. Also, that crucial 50,000 mark is what a lot of traders and analysts would prefer the Bank Nifty to take on. And of course, on the losing end, we don't have too much to speak for. We have a little bit of profit taking for Adani Enterprises, but even that has been arrested to a certain extent. At the moment, if you just consider the top gainers on the Nifty, we have something like a Divi's Laboratories, IndusInd Bank. 1.5 gain for HDFC Bank is significantly high because of its considerable weightage on the index. Adani Ports continues to move up higher as well. Remember, Adani Ports will also replace Wipro on the Sensex soon. And of course, we also have something like a TCS and L&T. So a lot of heavyweights are, counting for that up move coming through. And of course, on the losing end, we do have Wipro, ONGC, and Eicher Motors, but the losses are not as much. And that's where we continue to give you an update. But for now, the markets are looking good. Certainly is the case for the benchmarks, and the broader markets are once again, continuing to outperform. So something like the mid cap and the small cap indices are also advancing. The mid cap index is up around 0.7%, as well as the small cap index, which is up around 0.6%. And remember, even on a financial year-to-date basis, over the last 2 months, both the mid-cap and the small-cap indices have advanced by well over 10%. So even at the moment, the outperformance, the relative outperformance of these broader market indices continues. That's something that we will continue to keep an eye on. That said, let's talk about all the stocks that we are going to address in the show today. So we're talking about Adani Ports, and I briefly alluded to that. We're also going to take a look at Divi's Laboratories. We're talking about GMR Airports, as well as a handful of defense companies if we do have the time. And to take that up, well, we are in conversation with Ashish Kapoor, the CEO of Invest Shop. Ashish, good morning. Thank you for joining in. Ashish, before I come to you, let me take up Adani Ports. I have my colleague Puneet, who's standing by to give us the latest on the same. Puneet.
Well, thanks for that. So, as you rightly said, now Adani Ports is going to be entering the Sensex. Will be the first company from the group to enter this particular prestigious group. Now, it will be replacing Wipro from the 24th of June, and we will be seeing, its entry into the Sensex. Now, we wanted to take a deep dive into how the company has progressed over the past few years. Let's start with the geographical exposure of ports across the country. As you can see, it started with just one port in Gujarat, which was the Mundra port. By 2013, it had roughly 10% market share in India's port business, but roughly all of that came from just one port, which was the Mundra port. Over the last 10 to 12 years, the company has expanded its presence not only on the west, but also on the east coast. And as we can see, Mundra being 264 million tons, which is roughly around the 35% of the total capacity of roughly 620 MMT. But we see that across the western as well as the eastern port, the company has added newer avenues as well as capacities and ports over the past 10 to 12 years. The two major ones I want to talk about is firstly the Gopalpur port on the east coast. We have seen the 20 MMT. The company has acquired this port from Shapurji Pallonji this year. And the other one is down south in Kerala, which is the Vizhinjam port, which is roughly 18 MMT. Now, this is India's first port which has, a very deep capacity to take on ships which can't be taken on in other ports. So across the west as well as the east coast, it has expanded presence. Currently, roughly 27% market share in the port to cargo volumes of the whole country. So a really sizable presence that Adani Port has developed over the past 10 to 12 years, ever since expanding into multiple ports. When we move on to how the market share, where I alluded to, up to 27% now, which was up from roughly 10%, which was there back in 2013. So if we can show that in 2013, it had one port, which was the Mundra port. It has steadily increased over the past 11 to 12 years and has reached 27% market share, which is India's largest private operator. When you look at the numbers of cargo, that has been supported as well, which will be confirmed with this increased market share as well. When we look at the cargo volumes, especially from the COVID lows, and move on to the next graph.